Japan is preparing to unleash a $1 trillion war chest to save its crashing currency. But fixing this local problem could trigger a global stock market collapse. Welcome to the yen trap. To prop up the yen, Tokyo needs dollars, and they sit on a massive $1 trillion stockpile of U.S. government debt. Through a special Federal Reserve tool, they can swap those bonds for instant cash without actually selling them. This matters because of the carry trade. For decades, global investors borrowed near zero-interest yen and pumped that cheap money into high-yielding American tech stocks. But when Japan intervenes to make the yen stronger, those cheap loans suddenly become incredibly expensive. We saw this last August. A 10% yen spike forced traders into margin calls, crashing global markets by 12%. And the final macroeconomic threat? If Japan exhausts its cash tools, it will be forced to outright sell its trillion-dollar stash of U.S. treasuries, removing the biggest buyer of American debt. That would severely spike borrowing costs for the U.S. government and everyday consumers. To successfully defend the yen, Japan has to dismantle the cheap funding that's been artificially propping up the global economy for years.